Welcome back everyone to another video by Fully Informed Trade. My name is Alex and I'm just going to go ahead and review the stock market for today's video. I'm going to go over some key stocks and some analysis. So without any further delay, let's go ahead and review these key markets. First of all, dollar index does get a good signal on the trade triangle technology. The short-term trend is positive, and on the inverse, we do see the negative trend in the Forex Euro US dollar. Now, as you guys can go ahead and see, the Euro US dollar is taking is bouncing a little bit, but there is some more room to the downside. Next chart is going to be the S&P 500 Index E-mini March 2011. Now, this chart is pretty much the futures market on the S&P 500. We do see a bit of some support, but remember, this is just probably a relief rally with more continued downside to be expected. Now let's go ahead and look at the next chart, which is going to be the ExxonMobil. Now ExxonMobil is a very interesting trade because ExxonMobil is going to report earnings on Monday. The price of oil has gone up in light of recent events in regards to Egypt. But at the same time, you guys got to be pretty careful. I wouldn't buy into ExxonMobil just because of the fact it has gone up quite a bit enough as it is. It's already, Chevron itself has reported revenue as, it missed expectations on revenue. ExxonMobil can do the same. And, maybe, ExxonMobil could go up a bit on the morning's trade, but then again, it's not worth the risk. I didn't see ExxonMobil go up at all, even though the value of crude oil has gone up. So people are already selling their shares before the earnings are ever announced, which is bad. Let's go ahead and look at the next chart, which is the S&P Emerging Middle East. S&P Emerging Middle East gives us a great shorting opportunity. If you guys can go ahead and see, this market has already pulled back by give or take 10%, no, 15% or so, and there's more room to the downside as various companies are fleeing from the Middle East, and Middle East companies are also closing their doors for business in certain countries. And because of this, there's this whole entire unstable dynamic of this dictatorship that goes on, and this tyranny. One of them being Egypt. I remember another country, I forgot the name of it, but it started from one country and then it went on to Egypt, and it has a lot to do with the price of food and how these leaders aren't doing much to solve the problems these citizens are facing. So they pretty much want to kick out who's ever in office and who's been in office for around 30 years. The public opinion polls are showing something very negative on those on Mubarak, and because of that, various stocks in the Middle East are pulling back. We see a lot of negative action in Dubai, but right now I want to go ahead and emphasize the Egypt index. It has fallen by 25%, but we can anticipate more downside because remember, there's this, there's a risk of a bank run on Monday. When the banks open, a lot of people are going to take their money and withdraw it out of the banks because of the uncertainty that has been going on in light of all that's happening, all this political reform, the citizens protesting, people, just doing crazy stuff there. And because of that, Egypt is going to be a great short play, and we could easily see this market dip by around 50% or even up to 60 to 80% because of the severity of these events. Let's go ahead and look at the next chart, which is going to be SRA International. SRA International is very interesting, which its ticker symbol is SRX, so don't be fooled. The ticker symbol and the name are very different. Now, SRA International has a really high PE ratio of around 87. Now, its 1 year's earnings per share growth rate is at negative 68%, and the price to earning forward 12-month expectations are way too optimistic. It implies that the company's earnings will at least double to triple to meet industry standards or the norm. And it's not exactly a growth company, and I do see some key resistance areas that look ugly. Now, the chances of it pulling back are very likely, and in light of the current market action and market theme, we could see more downside. The whole social paradigm of the markets have changed more or less more to the negative than the positive. And because of that, you know, it is a very good short opportunity, in fact, and we could anticipate some support at around $23 per share. Let's go ahead and look at the next chart, which is going to be Abercrombie and Fitch. Abercrombie and Fitch is very interesting. As of right now, it has already broken a major support line, so this market has already traded below that. It has traded, the 20-day moving average has crossed under the 50-day moving average, which adds more bearish momentum to it. And on top of that, we got the 100-day moving average coming in as support, and then we have a major trend line at around 42 bucks. If we're going to anticipate downside, we should look at $42 from 48.29 to around 42. That would be your area to short and cover. But there is a probability that it could go down. The likelihood of it going all the way down to 32 is very unlikely, but 42 is a great possibility to short it until it gets there. Let's go ahead and look at the next chart, which is going to be Liquidity Services. Now, the Liquidity Services is a company that has not so bad of a valuation. In fact, the valuation isn't too bad on it. It's not overpriced exactly in proportion to other companies in the same sector. But the whole entire market mood and the outlook on the markets right now has become fairly negative. So what's going to happen is that chances are this stock will trade back into its channel. And if you're going to short, you should short towards the top of the channel and cover towards the bottom of the channel. 1350 would be your area to short once it gets below that trend line, and then you would cover somewhere later on down in the future, down later on in the future, at around $12 maybe. It would be a cover area that would give you around, give or take, a 10% profit, which would be very good considering the indexes haven't performed that well this year. So give or take, if this market is trading in a channel, why not take advantage of it? Let's go ahead and look at the next chart, which is the Direxion Bear Financial. Now, this is pretty interesting because what's going on is that it's trading in somewhat of a channel. It has found some support off this major trend line, and it has broken above the 20-day moving average, which is very positive. Banking stocks will remain weak for the rest of the week, and that is kind of interesting cash phrase. But weak, as in W-E-A-K, so it's going to be weak, as in it's going to keep going downwards. And for the rest of this week, most likely we will see stocks like Bank of America, Citigroup, JP Morgan, and Chase follow a similar pattern. In that case, the stock should rally up and give traders maybe a 10 to 20% return on investment. The likelihood of it breaking this trend line is slim, but even if it does, it's not too big of a deal. You wouldn't miss out on much anyway, and you should look for alternative opportunities by then, which I will point out. Okay, let's go ahead and look at the next chart, which is Baidu. Baidu is a very big growth play off of the China, internet craze, and because of that, Baidu is pretty much China's search engine. Just imagine Google except Baidu in China. Its earnings have grown tremendously. In fact, people are estimating 4 times the earnings this same quarter than it was last year. Now, a lot of people in China are getting access to computers and the internet because it is mandatory and necessary if you want to thrive in this internet-based economy. And Chinese culture requires you to basically adapt and to learn. And they're gonna be buying a lot of computers, and they're gonna be hooking up to the internet quite a bit more in the future. And Baidu is just geared right up for that. Because of that, we should anticipate somewhat of a pullback. I really can't recommend a short position. In fact, more opportunity to the buy side than there is to the short side. Unlike what we saw with those Africa and Middle East funds. So if we go ahead and anticipate a break below this trend line, or not this trend line, but this moving average, and we see Baidu trade around $97 per share, that would be a great area to go ahead and pick up some shares in Baidu over the longer term, because remember, this is the Google of China, and with about 1 billion people roaming the web in China, maybe someday later on that will be a great source of revenue. And because of that, Baidu is the way to go as long as it can go ahead and pull back to this major support area, and we should definitely buy some for the longer term. Let's go ahead and look at Ford Motor Company. Ford Motor Company pretty much breaks the 50-day and the 20-day moving average because they missed expectations. 100-day moving average is the next area of support, but it is likely to find support at around $13.80. A short would be okay, but remember, chances are Monday there's going to be a lot of shorts covering. It could bounce up a bit, and if you see a quick bounce, then you could probably short back into it and put in a pretty tight trailing stop into it. And once it hits around $14 or so, that's when you should be looking to take some profits off the table. And that's pretty much all I want to go over for today. If you guys want to go ahead and use the same trading software that I use, please be sure to check out the link below this video. For all of you guys on YouTube, please be sure to subscribe to my channel. And all of you guys on Facebook and my friends watching, please be sure to tell your other friends about these videos, because I'm sure it will help some of those out there that want to learn more about markets, more about stocks, bonds, forex, you name it, I'll cover it. So of course, for you guys on Twitter, please be sure to tweet away about my videos. I'd appreciate it if you would send some tiny URLs to my videos, because it's all about growing and expanding and talking about these markets. I really appreciate all of that. So anyway, that does it for today. And I'll have more for you guys in the coming weeks and months ahead. Take care. I'll see you all next time.